Hello and welcome to our Minds and Money 5 at 5 show. My name is Andrew Fake. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m. is to maintain engagement between investors and miners through a lively interactive format. Just a few admin announcements before we start. There is a chat function at the bottom of the screen where you can go and post questions. We can also unmute participants. So if you'd like to go and ask a question live, you can wave your hand virtually on the invite participants function, and you can ask your question live. And we also aim to keep the event. As interactive and as fun as possible. We have a star-studded lineup of guests. So to introduce them, I'd like to hand you over to Richard Morrow, equity partner of EL&C Baillieu, but also chairman of the Melbourne Mining Club. A warm welcome to Richard Morrow.
Yeah, thanks, Andrew, and look, many thanks to your team and Minds and Money. Melbourne Mining Club is delighted to be working here with Minds and Money, and we love this 5 at 5 concept. Today's event has a truly international flavour, and now, as Andrew says, we want 5 at 5 to be as fun, as interactive as possible. So, we love audience participation, even more than a rising gold price. So, we have got a polling question for you to go through throughout maybe 2 polling questions through the webinar, and we're looking for your votes. So let's go straight to the first question. We want you to name the CEO or chairman of a mining company that you most admire. I have 4 names supplied to me by Minds and Money. However, if you disagree with any of the 4 options, and look, you're welcome to select the space called Other. If you select Other, please write that in the chat box who you will have voted for. So here we go. The 4 nominated names here. We've got Mark Koutafani from Anglo American, got Mark Bristow from Barrick, Sean Boyd from Agnico Eagle, and Ross Beattie from Equinox Gold and Pan American Silver. They're there. I want to see your votes. But look, while you're getting your heads around that and placing your votes, I'm going to introduce you to the panel and ask them who they would vote for. But first, I'm going to vote. I'm going to place my vote, and I'm going for the home team. I'm breaking away here. I'm going for Billy Beaumont from Northern Star. He's built an absolutely amazing Aussie gold company. So he's my vote. But you pick your own. And look, as I introduce each one of today's speakers, I'm going to ask them who got their vote and why. First up, I'm delighted to have my colleague John Forwood from Melbourne as well. John is the Chief Investment Officer at Lowell Resources Fund. John managed a 109% return last year, so we better pay close attention to what he's saying and ask him who will get his vote. John.
Thanks, Richard. Yeah, look, I'm going to go for someone a bit left field. Another Richard Hyde from West African Resources. I'm a geologist by background, and it's very hard for geologists to make that transition to be, CEO of an operating mine, particularly in a place like Burkina Faso. So, and Richard did that, under budget and on time. So, look, he definitely, is right up there.
Very strong vote there, John, and I can see where you're coming from. But let's go to our first international guest. We have from the US, Matt Geiger, managing partner of MJG Capital, a resources investment group. Matt, who gets your vote and why?
Well, great to be here, Richard. This is my second 5 at 5 panel here, and it's a pleasure to be sharing this one with you, gentlemen. Not going to go as far out of left field as John there. I'll stick with the names mentioned, and this is an easy one for me, but it'd be Ross Beattie. I have a lot of respect for all 4 of the men on that list. I will say that the first 3 are more operationally focused and have really been involved in a big company culture for most, if not all, of their career. Beattie, of course, has that under his belt as well, with his experience with Pan American Silver, and then most recently with Equinox. But he also really has that entrepreneurial spirit and has gotten companies going from an exploration project and onward. So he's really excelled in all phases of the development cycle. He's a modest guy. He does not have a massive ego like a lot of the CEOs in the space. He's also an environmentalist, which I find quite unique. And a lot of people would say there's something hypocritical about that. I disagree entirely. I think there's responsible mining, and we should all keep that in mind. And so BD would be my pick. He's a good guy.
Well, I think we're going to get a lot of focus on that entrepreneurial aspect of it on that one, Matt. So that's a good vote. Thanks. Now, just to show the international flavour and the international all-star panel we've assembled here today, I'm going to jump across to Paul Sherriff from the Fountainhead Partnership in Singapore. Who would you choose, Paul, and why?
I'm backing you up here, Richard, with Bill from Northern Star. I mean, you're talking about a 10-year period of time where you've gone from 10 cents to $15 in the share price. So there's a tip. But I guess that built a $10 billion company there, really changing the industry's mindset along the way about value creation from a development perspective. Focusing on profitable ounces, not quantum of ounces, but profitable ounces. Generating significant cash flow, and essentially from projects that the majors have given up on. So, look, I mean, and the other thing too, of course, it was totally missed by a significant portion of the investment community, sadly myself included. So, I'm not talking with my wallet. So, yeah, Bill from Northern Star.
Look, I know how you feel there. We had Bill speak at the Melbourne Mining Club in December 2014 or 2015, it might have been, and he told us, but I think I wasn't quite smart enough to listen. Anyway, thanks for that. That's a good vote. Now, more on the international side of things, all the way from Montreal, we have Vincent Metcalfe, Chief Executive Officer of one of our speakers today, Nomad Royalty. Vincent, what's your choice and why?
Well, just to make sure we're a bit different in our choice, I'll actually go with Sean Boyd. There's not a lot of people that have been able to be a CEO of a mining company for 2 or 3 years, let alone 20. I think he was named in late 90s, so 1998, I'll say. So to be a CEO of a mining company, of a major mining company for that long, and go through these cycles and actually be a leader coming out of it for the sector, I think shows that he definitely knows what he's doing. And I think when you talk, the Agnico Eagle brand is something that's recognized as, probably one of the top mining companies in the world, from a sustainability point of view, from an operational point of view. So to be able to lead a group of employees and stakeholders that well, obviously, I think that shows that he's done a pretty good job on that front. Obviously, less of an entrepreneur than Ross Beatty. I probably would have gone with Ross Beatty as well, maybe. But I think from a pure CEO point of view, I think he's definitely probably one of the top out there.
I'm sensing a bit of Aussie versus North American rivalry here, but
gotta stick up for your own.
Yeah, I like that. Now, completing our all-star panel today is James Anderson, Chief Executive Officer and Chairman of VanGold, coming to us Vancouver. Hey, I don't know if you've got the deciding vote, James, but let's hear it.
Well, first of all, I think I'd like to echo Matt's comments. All 4 of the gentlemen that are listed on the list are fantastic CEOs. I think all of us who are CEOs of exploration companies or mining companies should aspire to be the 5th name on that list. But then I think I'd also like to echo Vincent's comments. Sean Boyd has held the helm at that company for a long time. We all have to live through the cyclical nature of this business, but if you look at the anti-secular nature of Agnico Eagle, it is counter-cyclical, an extraordinarily cyclical business. I'm old enough to remember when Agnico Eagle, a lot of people don't know what Agnico is. That comes from silver with the AG and NI for nickel. It was the silver and nickel company. I'm old enough to remember when Agnico Eagle had some, well, I was going to say crappy, but some middling assets in Quebec. The change in that company isn't all of Sean's doing, but a lot of it is. And if you look at the tremendous focus that company has now, it only operates in a few jurisdictions. and they are very, very good at where they operate.
Hey, that's I tell you what, this is looking good. Andrew, have we got any indication yet on who do we have a winner?
Well, I think we can have the polling up. It looks a bit even between Mark Kudafani and other. Within other, it's Bill Bowman. So a bit of a like a dead heat between Mark Kudafani and Bill Bowman, I'd say, Richard.
Oh, I think the Aussies have it then on that basis. Sorry about that, Caps, but yes, we're leading the poll here. We'll keep running for that. All right, let's get into the real meat of today's 5 at 5. Even though I might be knocked off Mark Kudafani's Christmas card list for not voting for him, but there you have it. Let's put our panel to work here, and we've got two interesting companies for our audience here today, and maybe even a third if we get lucky, each tackling a different aspect of mining. First up, I want to hear about Nomad Royalty, a new company, a young company. Vincent was telling us before. Vincent Metcalfe, thanks for joining us today. You are the founder and chief executive officer of Nomad, a $700 million company in the exciting sector of the resources market. Tell us a little bit more about Nomad today.
Yeah, thank you very much, Richard, for the intro. Well, we're a new company, but the first thing I'll say is that in terms of the management that's in there, Joseph Delaplante, Elif Levesque, and myself have been together for the past 6 years in the royalty sector. So, we've created Nomad. It's only been trading now for 3 months, but from an experience point of view, I would say that, we have a tremendous amount of experience, transacting on royalty streams and buying portfolio of assets. So, we're very excited to have created Nomad. Nomad is the newest significant entrant, we'll say, in the royalty and streaming space. As you said, we've got a market cap for around $700 million right now. We've got 10 assets, which are, basically everywhere in the world. We've got a very strong global presence, and I think what's great about the royalty space and why every investor should have some type of exposure to royalty companies is just because we as a management team, our goal is to minimize risk, which there is a lot in mining in general. So when an investor is looking at diversifying its portfolio and perhaps having something that's a bit more stable and a bit less volatile, I think the royalty sector in a royalty company fits that bill for that investor, because when you look at it, a mining company gives you specific, I would say exposure to certain assets. A royalty company will give you, exposure to the commodity that you want. So gold and silver, in our case, will give you exposure to resource growth because we have access to, exposure to assets, basically life of mine in general. And really what our job is as a management team is really to, minimize risk, which minimize risk takes a few different forms. You've got, minimizing jurisdictional risk, minimizing asset concentration, minimizing asset risk in the sense that not having too much, not the same operator all over the place. And also making sure that from a volatility point of view, the more assets we add, the less you should see on the risk profile. So we see ourselves almost more as a portfolio manager than an operator, because we can't operate those assets that we own, which are the streams and royalties. So we strongly believe that the royalty and streaming sector is something that should be part of every portfolio. And our goal right now, we're the newest entrant. We're probably the 6th or 7th largest royalty company in the world. But from a growth perspective, we think that there's a lot of stuff in front of us. And in the current market, I would say that there's a lot more opportunities than we ever thought. The great thing also about the royalty and streaming sector is that we play both sectors. We play the precious metal sector, and we also play the base metal sector, because we're able to buy secondary products from the base metal producers. So, in a good gold environment, obviously we do very well on our past investments, and sometimes there's a bit less deal flow from that sector, but then we could look at copper, zinc, base metal opportunities. So from that sense, I think it really gives us, a good a good setup for the next years to come. And we're very excited to have created this company just a few months ago.
Thank you, Vincent. Look, the panel are gearing up to ask a question, but because I'm the boss, I get to ask the first one. With interest rates so low and investors looking for a return on capital, are you finding it hard to identify new opportunities for investing in royalties?
No, not at all. I think when you look at how the royalty and streaming sector evolved over the last 15 years, the aggregate market cap of royalty companies 15 years ago was 2 billion. As of last quarter, it was 72 billion. So obviously there's a lot more investor interest in royalties. What that does, it gives us, the royalty companies, more capital to deploy. And what's really changed over the years, and we're hoping that, Australia picks up on this because Canada is very much more on the forefront, is when we're looking at the project financing of projects. 15 years ago, you had debt and equity, and you'd go 60% debt or 60% equity, and you kind of, basically chose what you thought was better. Now, in a lot of the cases, and we've seen it also with a lot of the majors, is, you've got your debt piece, your equity piece, and perhaps a stream or royalty piece, which comes in complements. And the good thing about streaming is that there's a lot less covenants for the operators. And we see ourselves as partners at the end of the day. If the mine doesn't produce, it's not good for us. So, we don't have that same relationship as a debt provider where, we sometimes won't be as nice, but we'll be very nice to the operator versus a debt lender. So I would say that's kind of from a pipeline point of view. We've been in this sector for 6 years directly, and we've never been busier than now.
Thank you, Vincent. That's a huge growth, isn't it? 2 to 72 billion. Wow, that's fantastic. Let's go to our panel. I want to first go to Paul Sherriff in Singapore and ask him, first of all, for him, do you do much investing in royalties, and what would you like to ask Vincent?
Thanks, Richard. Yeah, we have in the past. We've invested in royalty companies in the past, and we still maintain a small position in the space. I was just wondering, with the amount of competition that we've seen in the last 5 to 10 years and the pool of capital expanding significantly, I guess, whether you've had to reduce your hurdle IRRs in allocating capital, or whether you've worked out a way to differentiate yourself in the market to be able to get into these deals.
Yeah, no, I would say that from a hurdle perspective, if you look at, the past 50, 60 transactions where they're on streams, I would say the pricing hasn't really changed. From an NAV point of view, you're always kind of looking at that 1 times NAV, depending obviously on what spot is and what long-term is. I would say what really differentiates, why it's very rare, I will say that, if you have a stream process, that all 10 companies bid or participate in that process. I would say that typically you're going head to head with 1 or 2 other parties. Management is a key asset. I mean, I'm sure a lot of people would like to do deals with Franco-Nevada, but at the end of the day, and I think they have that credibility, but at the end of the day, management makes a difference, and speed of execution, in making sure that you understand what your vendor wants, because at the end of the day, they might be a vendor, but we see them as a partner. So if you're able to find a win-win solution on a stream, for example, and you're able to execute quickly, that will give you a lot more opportunity than I would say that that definitely gives you an edge versus your competition.
Well said. And now Matt Geiger from NJG Capital in San Francisco. Are you a player in that space on that one, Matt? And have you got a question for Vincent?
Sure. We are roughly 15% of our weighted portfolio is exposed to junior royalty companies. While I respect the bigger players, the Franco-Nevadas, the Wheaton Precious Metals, the Osisko Royalties, the Sandstorm Golds, the Royal Golds of the world, I do believe that there's an informational advantage that you can have as an investor if you focus on the smaller names. And so out of our portfolio of roughly 20 odd holdings, 4 of them are royalty companies. and they all have market caps sub 1 billion Canadian. So like Vincent said, I'm attracted to the business model due to the fact that it is far less risky, I would argue, than being an operating miner. Maybe at some of these multiples that investors are paying for these companies nowadays, that's a little bit less true, but at least in the heyday of the model, that's certainly the case. And then a point that nobody's touched on yet is the discovery optionality that comes from these junior royalty or royalty companies in general. You can own a nice 2 or 3% royalty over an 8 or 9 year deposit, and due to expiration on somebody else's dime, the operator's dime, if you're lucky, you could find that property still producing 1 or 2 decades later than you expected. So it's actually a really beautiful business model. You get a lot of that upside for free. Question for Vincent here. This is a bit of a tough one I've done a lot of thinking on. Obviously the royalty model has been embraced wholeheartedly in North America. Do you have a sense for why we're so far behind in Australia, and why there's not any blue chip globally known royalty companies listed on the ASX or focused primarily on Australian assets?
Well, there's, from our understanding and having, discussed with a lot of operators in Australia, there's a basically tax reasons and royalties are not essentially treated the same way as everywhere else in the world, or at least in Canada or in the US, for example. So it's a lot more onerous for the seller of a royalty. So that's why I believe that when you do actually see royalties in Australia, typically they're capped. So from a tax perspective, they're a lot less, or at least you understand the value, versus when it's open-ended. From what we understand, you could have a balloon payment of some sort. So I know that a lot of the operators are a lot less, I would say, eager to put that out.
Mm-hmm.
Yeah. John Forwood is the director of Lowell Resources Fund and our chief investment officer. You probably looked at a few royalties in your day, and there's not many listed companies here of any size anyway. But what would you like to ask Vincent?
Oh, thanks, Richard. Look, don't want to open your black box, Vincent, but I'm interested in how what prices you use to evaluate various opportunities. Whether with the run up in the gold price, how you're managing that, and whether you're taking maybe a more conservative view like a traditional bank, or whether you're taking more an equity style view of metal prices.
Yeah, I guess it's not it's not a pure, I would say, math model per se. I mean, it's something that evolves depending on the current environment. But I would say that in general, what's the most important thing for us is to figure out what's the break-even point of that specific asset we're investing in. We're happy because as a company, our margins are 77% if all goes well, if the mines keep on delivering. But the most important thing is that we want to make sure those mines keep on delivering. Even with gold prices now that are going much higher, it's great. It's making a lot of the ounces even more economical, and our streams and royalties are taking more value. But what happens if gold goes down to 1,500? Are those mines, or if it goes down to 1,300, are those mines still economical? So that's what we really look at when we look at investing into these various I would say instruments. It's making sure do we really understand at an asset level what it takes for that mine to work? And I would say that's the question we need to ask. Once that's done, then the second question is, okay, exploration upside. Have they invested in exploration? If they were to invest in exploration, what type of upside could we potentially get? As Matt said, on somebody else's dime, on the operator's dime. But at the end of the day, we also want to make sure. So that's the second question. And the third question is, okay, we're happy, we like the asset, we like the exploration upside. Now, how big of a stream or how big of a royalty could this asset actually handle? So I would say that's the actual kind of process that we go forward with. In terms of gold price, for example, when we did the deal with Orion and Yamana on the creation of Nomad, that we signed exclusivity end of December. So long-term gold prices were around 1380, spot was 1475. So we were using those two metrics as kind of boundaries to kind of understand, are these assets, do they work in these environments? If it goes down 10, 20%, what does it do to the model? I would say that in general, those were the metrics, that we were using.
That's that's a great answer. Thank you for that. And Vincent Metcalfe from Nomad Royalty, thank you for sharing those insights today. From my point of view in Australia, it's not something we've got a good handle on here, but perhaps we should. Okay. Our next guest today is James Anderson, CEO of VanGold. It's listed in Canada, but with operations in central Mexico. James, thanks for joining us here today. I'm looking at that share price. You're obviously doing okay because of these silver and gold prices. Tell us a bit more about VanGold, if you could, today.
Yeah, Richard, thanks so much. I'm just going to try and take this opportunity to give the panelists and everyone else who's watching a very brief overview of VanGold, and then hopefully we can ask some questions. So the couple of slides that we just went through, just some forward-looking statement comments. I will be making an enormous number of forward-looking statements, so I always like to point that out to our viewers and audience. So this project has a very unique history. I'm going to tell you just a little bit about the history of the project itself. I'm going to tell you about what we've been doing for the last 90 days or so, what we're doing right now on the project, and what we plan to do in the next 90 days. So about 110 years ago, this mine was being mined by two different mining companies. One was a British company, one was an American company. In 1906, they merged, and that entity, the Pinguico Mines Company, was listed on the New York and Boston stock exchanges. Pardon me. When you go to this project today, there's no choo-choo trains anymore, just pickup trucks. What you do see, though, is that waste pile over to your right. That's essentially intact. And what we managed to do about 90 days ago or so is to do a bulk sample of that waste material. And we sent 1,000 tons of that material to a local mill that's owned by Endeavour Silver Corporation. We ended up getting about 75% recoveries in gold, a little better than 60% recoveries in silver, but we think we can do better on that on a go-forward basis. So we like to think of ourselves as an exploration and development company, albeit from a very small market cap perspective. That waste material, we think we can make some money on, but there's a similar sized stockpile of material that was what they thought of as a low-grade stockpile about 100 years ago, but it grades about 3.6 grams of gold equivalent, and that's within the mine itself. And we think that we can make good money on that over the next 24 months or so, sending it to one of the 4 active mills in the Guanajuato area. So Elaine, if we can go to the next slide. What we've been doing in just the last few weeks is beginning to get ourselves in a position where we can take advantage of the material that we know is underground, that has already been mined, blasted, and sits at the bottom of a large open stope, so that we can begin to move that to one of the local mills. So we've put together this small head frame. We've put together the winch that's necessary to be able to access the 7th level of this mine. And just last week, our engineers and miners were able to go from the 5th level to the 6th level of this mine. And we think that that's the first time that human beings have done that in this part of the mine in about 100 years. So that's very exciting for us. Elaine, if we can go one more slide, please. Here you can see the fact that the thing was a pretty big deal in its day. It was mined on 10 levels using 3 exterior shafts. The average cutoff grade during production of this mine 100 years ago was 15 grams of gold equivalent. It was the highest grade mine in the Guanajuato area, which really is saying something. Guanajuato has a 450-year mining history. So you can see that central shaft there. That's the shaft that you saw in the other image. That's what we're trying to do. And you can see the outline in blue. That's this underground stockpile that we're talking about. It's about 150,000 tons, 3.6 grams of gold equivalent. We don't think that we're going to be getting rich doing that, but we do think for a company with an $18 million Canadian market cap, that's a very exciting asset to be able to monetize over the next couple of years. But refurbishing this mine into what it was 100 years ago, that's our main thrust. If we can go to the next slide again, Elaine, please. There you can see one of our mining engineers, Gerardo Dorado Cantu, being the first human down to the 6th level. Go ahead, one more slide, please, Elaine. And what we hope to be doing here in the next 90 days or so, after we do a little bit more groundwork, is to be accomplishing what Vincent was talking about, which is, where is the big upside for this project? And that's finding more very high-grade in-situ material in this epithermal system. So we're going to be concentrating on this central zone, the Don Ricardo target area. And the reason that we're going to be concentrating there to begin with is that we can get an underground drill rig into the old workings very quickly and to drill back towards the vein system into areas that were not mined 100 years ago. And next slide again, please. So that will wrap up my comments. Happy to talk about this for hours and hours and hours. So if any of your viewers want to send me an email, I'm happy to discuss that with them or within the Minds and Money forum. But I'm also happy to tackle any questions that anybody has on the project or our team.
Well, that's great, James. Thank you very much for that. Exciting times in silver and exciting times in Mexico. That's certainly. I've been listening to Eric Sprott a bit on silver, and it seems like an exciting part of the market to be. Now, before I go to the panel and ask for a few more questions, we do have a second poll where we get something back from our listeners and viewers here today. No such thing as a free lunch or a free dinner. So we're going to ask you now if you could nominate which precious metal are you most bullish about? Is it gold? Is it silver? Is it diamonds? Or is it the PGMs? So we'll have that slide up there. I want you to vote early, vote often, and we'll come back to you with the results from there. Myself, I'm going to be voting for silver on that one, and that sort of leads us into our panel and questions today for James. Let's first, I'd like to, if we can, throw to John Forwood. John, in Australia, we don't have many silver companies out here, but it's a sector of the market that has been very popular with investors and speculators over many, many decades. John, what would you like to ask James today?
Yeah, thanks, Richard. That's correct. Most ASX companies, if there is silver exposure, it's as somewhat of a byproduct. But obviously, the TSX companies have a lot better exposure to Mexico. James, just a geological question. Interested to know the nature of those veins. How wide are they? And is there a potential to do mechanized mining, or will it always be handheld?
Yeah, okay, so great questions. These are epithermal systems. These are sort of typical Mexican epithermal systems. The vein systems themselves at El Pinguico generally are 3 to 5 meters in width. Our particular deposit is somewhat unusual within the Guanajuato area. The host rocks for almost all of the other deposits are andesites, whereas ours are rhyolites. The thing that makes that interesting, or the corollary effect of that, is that there's been a fair bit of bleed of the mineralization into the rhyolites in our deposit. And this is almost a new type of deposit that is being recognized within the Guanajuato area. And Fresnillo PLC is kind of spearheading that type of exploration. So most of our focus is going to be trying to tackle and explore the high-grade epithermal vein systems. That's what was mined in the past, and that's what all of the mining that takes place in Guanajuato today focuses on. But there is a potential for a more bulk tonnage type of situation here.
Well, given the explosive growth in that's coming towards us in Mexico and in these sort of high grade and not a narrow width mining, do you anticipate it being easy to recruit experienced miners, or do you think there'll be some pressure on the workforce there in Mexico?
Well, okay, that's a good question. There are so many competent miners and mining engineers in Mexico, and it's almost a closed system. I mean, as proud Canadians and proud Australians, we send our geologists and mining engineers all over the world. Generally speaking, that doesn't happen in reverse from Mexico, and it should. Where we're working in Guanajuato, as I mentioned, there's a 450-year mining history. There's ample mine experience and an ample workforce to be able to draw from. So we haven't experienced anything like shortages so far. Although, if the market continues the way that it is, that will affect our ability to hire people. I would say very quickly. I would say within months.
No, that's good. Before I go to next question, next from Paul Sherriff, we've got a question put over from our chat box here. It comes from Jacob Ambrose Wilson. James, what do you roughly estimate to be all-in sustaining cost to be at El Pingüinco?
Right. It's a difficult question for us to answer at this point, because really what we're looking to do is to mine the stockpile material and not the in situ material. And I think I would be uncomfortable cuffing a number for the in situ material. I can tell you that for our underground material, depending on whether we use the lower adit as a corridor to be able to move that material to surface, or the Penguico shaft, we're looking at numbers like $15 or $32 a ton to move that material to surface. That works out to even paying one of the local mills, it works out to about $450 all in sustaining cost. But I hesitate to draw that straight line, because it might be an all-in cost, but I'm not sure that it's sustaining, because we'll only have about 24 months of material if we're just looking at that at the stockpile material.
Thank you, James. Now, Paul Sherriff from Fountainhead Partnership in Singapore. Do you have a question there for James?
Just briefly, what's the security situation like in that region of Mexico? I'm not familiar with it. And do you have more than one option for tolling other outside of Endeavour, or do you have another milling option? Right.
Okay. Let me tackle the second question first. In terms of the number of mills in the area, there's 4. The Endeavour mill is about 28 kilometers. The Endeavour mill that we used for our 1,000-ton bulk sample is about 28 kilometers from us. That's the furthest one away. So there's 3 other mills that are closer. Great Panther has a closer mill. Endeavour actually has a second mill, which they closed in November of last year. And at that time, I thought, well, that's a little bit disheartening. I've changed my mind on that a little bit. I think that there's every opportunity to do some kind of business there and utilize that mill. Fresnillo has a mill that's exactly 2 kilometers from us. That was supposed to be back in operation at the end of March. Because of COVID, it's not. We don't have a firm timeline, but I suspect that it's more like 2 weeks or 2 months and not 2 years before that's operational. So although I cannot, give you a very firm, contract as to where we're going to be sending it, I think that there's ample possibilities about where we can send that material. With regards to the security question, I always like to joke with people when people ask that of mining stock promoters who have Mexican assets. What they like to say is, wow, there's no security problem here. That's in all the other parts of Mexico. The reality is that there are security issues with the mafia. That's what I like to call the cartels, because that's what they are, in every square inch of Mexico. Generally speaking, the miners, and there's a lot of Canadian miners that are operating in Mexico, we get a free pass. So long as we're not involved in the mafia wars that are going on there, and so long as we stick to our mining, there have been very, very few problems related to that security situation throughout Mexico, and for 25 years.
Thanks, James. That's a great answer. Getting a few questions here on the chat box, including from Joe Kukuza in my hometown, and we'll get to your question soon, Joe. But I want to go to Matt Geiger at MJG Capital in San Francisco for a question, and also ask Matt, do you have much exposure to silver in your portfolio, and what would you like to ask James?
Sure. So we do actually. At the moment, 70% of our weighted portfolio is either gold or silver focused, which is very high. I mean, if you'd asked me that question 3-4 years ago, it would have been closer to 20%. That's a combination of our gold and silver focused names outperforming maybe the base and energy metal names, the ag names in our portfolio, as well as just some tactical allocation decisions that I've made over the past 18 months. But I will say, as an investor, my main focus is on people, asset second, at spot prices or less, and the target metal is one of kind of the very lowest priority questions that I ask. So I think that's worth stating. So in terms of focusing the attention back to VanGold, I know James mentioned that there might be bulk tonnage potential there. And I'm interested how they plan to evaluate that from an exploration standpoint. And then also if you could just comment on kind of the local community sentiment, permitting, and how possible it would be if they find appropriate mineralization to potentially do open pit mining at El Pinguico.
Right. Okay. So a lot to unpack there. Let me try and tackle the permitting question first. As I mentioned, it's a very old mining camp. Lots of different miners in the area. However, there is a Canadian miner. Maybe what I'll do is not name them, but they have they have a low-grade bulk tonnage deposit that's at the I think sort of at the pre-feasibility stage, about 30 kilometers from where we operate. So maybe half a gram, I think it's sub half a gram material, 200 million tons, that sort of thing. They're having a very difficult time moving through the permitting process because they want to use cyanide. So all of the mills in the neighborhood are flotation mills. Nobody uses cyanide, and I'm pretty, I don't know, ambiguous, I guess, about the use of cyanide. I don't think it's a very deleterious ingredient, and I think that that should be allowed. But the public doesn't think that. The public hears cyanide and they run for the hills. So there are challenges like that. I guess with regards to the potential bulk tonnage situation, really that type of deposit and having gold and silver in rhyolitic material, that's something that's brand new. And as I mentioned, it's something that's being looked at quite strongly by Fresnillo PLC. They have a deposit about 30 kilometers to the south of us. The exact tonnage and grade, I don't know. But that material is much more disseminated within the rhyolites. And because of the proximity between their mill and our project, they've made some overtures to come and have a look at some of our rhyolitic mineralization. We'll see how that goes. I think the best way for us to explore for that is with drill holes.
Yep.
Right. That's going to be a really interesting question, that one, and I think we'll circle back to that in a second. But I want to go back to have a look at how those votes are coming in for the precious metal, or the metal of choice. And then I want to bring, but before that, I want to bring also Vincent Metcalfe back in with a question there for you as the Chief Executive Officer of Nomad Royalty. How are your metals shaped up there? Do you have much exposure to silver, or are you more gold, or are you more base metals at the moment?
Yeah, no. So at the moment, we're actually 100% precious metals. We've got 77% exposure to gold, 23% to silver. I would say that we're pretty agnostic in terms of silver to gold, but obviously there's a lot more opportunity in gold. So I think that's typically one of the reasons why you typically see a bit more exposure to gold on the royalty front. Some companies like Wheaton Precious Metals, which started as being Silver Wheaton, started the streaming industry based on streaming silver from big base metal projects. So I think perhaps as you see gold and silver do well, as I was saying earlier, having that hedge into perhaps doing deals with the base metal operators, we might see that silver component on our end go a bit higher. But I also do love copper and a few other metals, typically just because for copper gold porphyries, for example, you're looking at assets that could go for 50, 75 years, which from an operations point of view is great, because it's one that once you do the investment, it's like, hey, you've got 75 years to hopefully to just collect essentially get the benefits of those deposits. So I think that's what really gives those larger copper gold porphyries that big attractiveness.
When you went out to raise this capital, how did you frame that? Did you go for that precious metal sort of all over picture, or did you have a gold silver mix that you what were people most invested in when they gave you the money to manage?
Yeah, I would say that in the streaming sector, it's pretty. I mean, there's a lot of companies that have tried to say that cash flow from base metals was the same as precious metals, which is weird. But from a market perspective, precious metal royalties get much higher valuations than their peers on the base metal front. So, from Nomad's perspective, we're really, really focused on precious metals. We would probably never go lower than, right now we're 100%, but, if we ever got below 80% precious metals, I think I don't see that happening essentially, but we've seen companies be only base metals and saying, no, it's cash flow, it's cash flow, it's cash flow. But from an investor point of view, there is a difference versus cash flow from gold or from base metals. I see Matt move, and I know he's got a lot of views on that. I think he's got some, royalty exposure on the base metal front. So I'm sure he's got some views on that question.
Sure. Personally, just to jump in, I will say that I do believe cash flow is cash flow. But from a Nomad perspective, strategically, I think you guys are going about it properly, because I do believe that if you dropped below that 80% threshold that you mentioned in terms of exposure to precious versus base, you would be penalized by the market for that. And so I think, it's in the royalty space, you really got to pick one or the other, and kind of mixing base and precious metal assets. You're kind of going to get the worst of both worlds in terms of the multiple that you're getting from the market. That said, I do think the base metal royalty space is, it's a wide open field at the moment. The stat is highlighted by Altius Minerals, which is one of the bigger base metal royalty companies out there. But if you look at the entire precious metals equity space, a full 25% of it or so of that combined market cap is comprised of royalty companies. And if you look at the whole base metal universe, it's closer to 1 or 2%. So I actually do feel there's a lot of room to grow kind of within the base and energy metal royalty space. That said, you guys are already well on your way as a precious metal royalty company. So strategically, your decision makes plenty of sense to me.
Well, the main thing for a royalty company is that you need to use your multiple. If you don't have a multiple that's much higher from an accretion point of view, it's tougher to do deals. And I think that's what's tough for base metal streaming companies, is that, the arbitration between where the royalty company trades and where the base metal company trades, it's tougher to profit or to really find a win-win for both sides.
Hey, that's thank you for that. How's that voting coming along, Andrew? Do we have a winner yet about the best of the precious metals or best investment metals there at all?
Yeah, I think Elaine's just getting up on the screen now. I think gold looks to be the clear winner with 56%, with not a lot of love for diamonds, I'm afraid.
Yeah. Oh well. There you go. There you go. And look, we've got. I've still got this question from Joe Kakuza from Melbourne, my hometown here. There for James. James, what about safety in the operations out there? I know it's early days for you yet, but I mean, what are you sort of thinking on that? The special sort of areas you need to consider in the Mexican operating environment?
Yeah, so I've been to Guanajuato on a number of occasions. It's a lovely 150,000 population city. It's a UNESCO World Heritage Site. The old town area looks like you're walking through a town in Spain or Italy. It has a real tourist trade where there's cool restaurants and cafes and parks downtown or in the old town area. I don't feel unsafe in the place at all. Again, as I've told my wife, if I'm going to die in Guanajuato, I could catch COVID. I could probably have a rock fall on my head underground. Those are both, real possibilities. The possibility of running into Mexican gangsters is very small.
What about when you move to the operating phase? Is there any features of safety there that you need to really focus hard on, as opposed to say, other operating environments?
Do you mean within Mexico itself or this particular project?
Well, yeah, let's go with the project. Yeah.
Well, I would say that the one of the things that really attracted me to this project was the amount of underground workings that exist, and in terms of exploration and in terms of being able to refurbish those to 21st century safety standards, I think we can do that. In terms of challenges, though, it's challenging, and some of the things that we've been doing here the last few weeks, getting down into the bottom of that Pinguico shaft for the first time in 100 years, that is not for the faint of heart. And it's not for rookies. So we've got a very experienced staff doing that. So are there physical dangers related to that? Yes, sir.
No, it's it's good to have that front of mind. It's certainly a big feature of the Australian mining industry is safety's right up there. Hey, we're coming up to the top of the hour here. This has gone so quickly, and I want to go around our panel today for any last thoughts, comments, or questions. And I want to kick off, if we can, with Paul Sherriff in Singapore. Paul, anything to wrap up there?
Not really. I guess one thing we've been thinking about recently, we're generalists, so mining's just one place to allocate capital, and we're looking for assets that generate cash flow. But I think one thing people might want to be mindful at the moment is there is a huge bubble in pretty much every asset class at the moment. So sometimes I'm looking at the gold price and thinking that's wonderful. We're very much hedged. We're being counter-cyclical here. But I just would like to sober up a few people. It may well just be that there's a lot of money chasing assets globally.
Mate, half our audience just switched off there on that. You're amongst the true believers here. Let's get with the plan. Yeah.
Let's not lose our sense of conservatism again, like we've done every other time.
No, it never changes. Here it's always different each time, but it's not. Matt Geiger, thanks for joining us here today. Your thoughts and any closing comments you've got?
Yeah, well, I'd actually like to echo that thought that Paul just made jokingly. I actually truly believe that the longer that we stay disciplined as a group, both as investors and as project operators like James and Vincent with the royalty company, the more long-lasting and that this bull market can be. So I really want to encourage people on this call to keep their heads, invest with good people, invest in assets that you actually think can be advanced and potentially built this cycle, not Hail Mary speculations on metal prices with these optionality plays. I think it's going to serve us all well. I know we're running a bit low on time, but one thing that's continually crossing my mind here is, where are we in the base and energy metal cycle here? I think most of the people on this panel would agree that we're firmly in a precious metals bull market, at least from the spring of 2019, and some would maybe argue from as early as 2016. But where are we base and energy metal wise? I'd be interested if some of the other investors on the panel had a quick thought about that.
Well, I go to John Forwood, 109% return last year. John, that's pretty good. How are you seeing things looking into the next 12 months?
Oh yeah, I guess I should try and counter Paul's bucket of cold water there. Inflation adjusted. We're not anywhere near the previous $2,800 peak of the gold price, and the old adage of "don't fight the Fed." I reckon that's really playing a big part in the valuations that we're seeing at the moment, and we are expecting interest rates to remain low for a considerable period, and that should assist in higher asset prices over that term. So we are fundamentally positive on the gold price. I think the base metals is much harder to call, given the disruptions we've seen with COVID. Who would have thought that the Chinese demand would be so strong that we're seeing right now? But in terms of supply, COVID disruptions to copper out of South America is certainly hard to call in terms of how much production will be coming back on and when. So very positive on copper in the longer term, but in the near term we think it'll be quite volatile.
Yeah, great comments, John, there. Thank you very much. Well, listen, before I hand back to Andrew I want to thank everyone sincerely for coming together on an international forum and putting some great thoughts out there. Vincent Metcalfe, Nomad Royalty, thank you so much. James Anderson from VanGold Mining, thank you as well. And John, thanks for your thoughts there from Melbourne. Matt Geiger from San Francisco, and Paul Sherriff from Fountainhead Partnership in Singapore. Thank you very much for your time and your input here today. Andrew, I hand back to you.
Okay. Many thanks to yourself, Richard, and the Melbourne Mining Club for hosting this session. Again, thank you to our five guests. Thank you to everyone dialing in, and see you all at the next session. Many thanks for your time. Goodbye.